What did the stock market do when we invaded Iraq in 2003?
Where did those profits come from? What strategies did we use to achieve the results that we did?
You don't want to trade something that has a 10 IVR. You don't want to trade something that has 110 IVR either.
The market was so chaotic. The day Russia invaded, the market went up.
With the leaps, you have to play those a certain way.
There's rumors of this company buying this company. Supposedly there's a big release coming out. Tesla might be launching a new car. Elon might be selling shares.
45 days trades are bread and butter. They are the foundation of your trading strategy.
If the market's going down, you know he's going to do something to stop it.
Those covered calls and those cash secured puts were...
Welcome back, everybody, to episode 4 of Behind the Trade podcast. Greg, how are you doing?
I'm doing great, Nick. How are you?
Pretty excited. 4 episodes in, and here we are, still being consistent. Lots of great feedback, and I'm excited about what we got on the docket today.
Yeah, tell us. What do we have on the docket?
So on the docket today, we've got Venezuela and how this, some people call it invasion, some people call it liberation, but how this will have ripple effects across the market. Our takes on it, we have not even spoken about it yet, so I don't know what Greg's point of view is. Some of you, if you've been on X, you know my point of view, but we're gonna try to take it from a politics to be more of market lens of what we think is gonna happen. We're gonna touch on our month end, how we did. Again, some of you probably see on X our P&L for the month of December, but we're gonna go a little deeper and tell you where did those profits come from? What strategies did we use to achieve the results that we did? And then we're gonna talk about the rough start that you and I have had so far
Yes.
for this year.
We have to talk about our losers and our winners, right?
Exactly. And frankly, behind the trade, really the more interesting ones are the losers.
And that's the idea, right? We're talking about behind the trade, the decisions, what happened behind the trade, right?
Exactly.
And before you get into Venezuela and how it affects the markets, can I just take a pause to talk about how excited I am about the progress that this podcast is making? We have 3 episodes out so far, 170 subscribers. I'm like astounded by that. We've got great comments. We have one guy ask a question like, what would you do with a smaller account? How would that change the way you trade?
And we will cover that. I know it's not on the docket for today, but that will be on our docket for next week. We're going to touch on that.
Yeah, exactly. So I just want to take a second to just say thank you to everybody. Like and subscribe if you can. It helps us out if you subscribe. We're really excited you guys are listening and are enjoying the content. I also want to talk about how excited I am about this course coming up January 31st. We've got a lot of interest. We have a lot of people signed up. We may hit our cap, so if you're interested, sign up soon. You got some time. It's January 31st, but I'm so excited to put on that course with you, Nick.
Yeah, likewise, Greg. And I'm really bad about this. I should be putting the link for the crash course down in the description. I haven't been doing that. My fault. But I'll put it in there. You guys can click on that if you want to check it out. If you have any questions about it, feel free to DM Greg, DM me on X, both of us on X. And if you have any questions, hesitation, if you want to know if it's right for you, just reach out. It's for all levels. And like Greg said, we are filling up really quick. We just we put it live, almost a week ago now. It's not till January 31st, and we're essentially almost at capacity. So if you want in, DM us or just sign up. And then, Greg, I agree. The comments, the engagement that we're hearing from everybody is pretty astounding. I mean, I feel like there's a lot of people that have these questions or want to talk more about trading in the way we are, rather than just always looking at charts and 50-day moving averages and cup and handle and all that stuff, but more just option related. I mean, for a lot of what we do, like you could just look at option chain, you wouldn't even need to look at charts. So I think we're finding our people,
Yep.
I guess, and it's great to see that there's others like us out there and other people who are trying to maybe just take a little risk, step outside their comfort zone to learn about something new. And I think that's just amazing.
It is amazing. I mean, when we found options, we didn't know selling options was even a thing, right? And we didn't had trouble finding a community. There's some podcasts out there, but there's really not a whole lot of content out there. So finding your community, it's wonderful that we found it here. It's wonderful that people are listening and getting excited about this topic.
Yeah. And with that said, let's talk about Venezuela.
Yeah.
So
big news this week.
Yeah. So maybe you can give us a little debrief about what's happened up to this point and what's going on.
Yeah. So last week, the United States, they bombed a small part of Venezuela, captured their president Maduro, took him back to the United States. He's being held in in New York on charges of narcoterrorism.
You got it. Better than I would have done.
That's a hard word. So how does it affect the market? Let's talk about a few things here. One of them, just some interesting parts of it, is oil, right? Oil is a big part of this. Venezuela in the 1950s was producing about 3 million barrels per day of oil. Now today, because the economy's just been destroyed over there, they're only producing about 1 million barrels per day. And there's a lot of speculation that we went into Venezuela not so much to capture Maduro, although maybe that's the public reason, but also because of these untapped oil reserves. Do you have any opinions on that?
Yeah, so the answer is we did go in there because of oil. We did go in there because of Maduro. But let me paint the whole picture.
All right.
The picture that I feel like people don't understand, all the moving pieces on the chessboard. A lot of what I hear right now, whether it's on Instagram or Facebook or X, okay, I'm lying. I don't really go on Facebook. On Instagram or on X is a lot of weekend warrior, armchair experts all of a sudden on Venezuela, experts on the military, experts on all this stuff. And these people have never been to Venezuela, don't know any people from Venezuela, don't speak Spanish, they've never been in the military, and all of a sudden they're just these experts on this very contentious moment that we're living. And I want to tell you about why we did this and why it was a brilliant stroke. And while also humbly saying, I'm sure there's many other pieces that I'm clearly not aware of, that none of us will be, that only, the commander-in-chief, the secretary of defense, secretary of state, Rubio, that they would know. But first of all, he is a narco-terrorist deemed not by the U.S., but by the UN, the whole world, okay? And under the Constitution, we have a right, essentially, to go get him. And under the Constitution, when we are making an arrest, we have the right to protect the people making an arrest, right? So that's kind of the umbrella that makes all this very lawful. So that's one. Two, people are saying, oh, here we go, just like Iraq, going into an oil-rich country. We're just going there to capture the oil, yada, 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 okay? People are not understanding what's happening. Venezuela is a shell state right now for Russia to sell their oil. It is illegal for any country to, if you want to do business with the United States, to buy any Russian oil. But what's happening is Putin is leveraging Venezuela to essentially whitewash all their oil and get it out there into the markets. All right. So first of all, by doing this, we just really put a huge coin, a chip on the side of Ukraine to help get Putin to go ahead and finally make peace negotiations with Ukraine, because this is how Russia makes all their money. And so without having an outlet of Venezuela to kind of smuggle their oil out into the markets, they're stuck. So that's one. Two, Iran, China, and Russia have been setting up camps and building out infrastructures, essentially, and Cuba, by the way, essentially leveraging Venezuela as their puppet for what they want to do in the Western Hemisphere, for what they want to do in the United States backyard. All right. Venezuela has the number one largest deposit, or undiscovered, I guess, but deposits of oil and gold. All right. So they are a very strategic site, but right now they are under the influence, I guess you could say, of Russia, China, and Cuba, and Iran. By doing this, you just nixed all that. All right, so that's a huge deal. So this is, in one stroke, you are attacking Putin, you're attacking China, you're attacking Iran. All right, this is essentially the third time we are pushing back against China. Right, China was heavily helping Russia with the Ukraine war. China was heavily having influences in Gaza, and obviously they're partnered with Iran. China's been partners with Venezuela, right? Venezuela is part of one of those BRICS countries that are trying to move away from the dollar and trying to create this divide. So this was a very, very strategic and brilliant stroke for us. As far as the oil goes, again, just that alone should be enough for everybody of what that does from a global perspective. But keep in mind, Venezuela also sells very, very cheap oil to China. China, while they are extremely good at producing or creating energy, right? Nuclear plants, they're building a lot of coal plants, all this stuff. We see it constantly, All In Podcast talks about it, but they're starved for energy. So they buy so much oil, and they've been buying it very, very cheap from Venezuela, from Russia. And this, again, puts kind of a kibosh on a lot of that. So the last thing I'll say about this whole kind of chess piece that's going on, keep in mind, right now, Venezuela, like you brought up correctly, they are not producing what they should be producing from oil perspective. If we had more oil out there, that would send prices down. Prices down is great for deflation across the board. Every company has the energy input, right? So if you can lower the cost of energy, right, that's great. And people that I hear, again, these armchair warriors are talking about how it's us going in there trying to take over all of their oil and all this stuff. Okay, keep in mind that the infrastructure that Venezuela has there right now, we're the ones that put it in. It was American companies that went in there and built out their entire infrastructure for their oil industry. So what we would be doing is injecting a huge stimulus of investment. It's not like we're going to be sending our people there to actually do the work. No, we're going to be sending investment dollars to go give jobs to people there, revitalize their economy, and do it under a protected state. Last thing I'll say is that people are upset saying that Trump said that the United States will run Venezuela until a transfer can happen. And I don't know why people are so upset about this. What else do you expect to happen? You think we're just going to pull out their president and his wife and then just leave a vacuum there? No.
Well, I think in fairness, they're probably concerned about what happened in Afghanistan and Iraq, right? Kind of the same setup where we went in there saying, well, there's nuclear weapons, but really we were after the oil. And then we ended up running those states somewhat for 15 years, right, before we pulled out. So that's, I'm sure, what the concern is there.
So that's fair. That's a fair criticism on a surface level.
Right.
And a deeper level, Trump has proven time and time again he is not the same as the legacy Republican Party and the Democrat Party. Those parties are the establishment. Trump is the first candidate, maybe the last one in our entire lives, that was not put in by the system. He was an outlier candidate that put his hat into the ring. No one thought was possible. Every poll that's done so objectively, right, said he was going to lose. And look at him. He won. And then he got all the stuff that happened that he didn't get reelected. And then guess what? Here he is again after all the indictments, all the charges, all that. Here he is again. Trump is the only president in our lifetime that has never, ever started a war. Now, some people might say, oh, he started a war with Iran. Okay, the 12-day war, guys, that's what we're going to talk about? Okay, great. If that's what the wars look like, that's great. 12 days and it's all over and Iran didn't even do anything. Okay. My point is, let's not take the actions of the past and assume that Trump's going to do the same thing. Trump has brought in tech leaders to help him. Trump is the first president to actually do what he says he's going to do. Right? He said he tried to stop getting the border bill passed, right, when under Biden, and they were saying we need all this money to do all this, and then no border bill gets passed, less than a month, border secured, all you had to do is enforce the rules.
Right.
So, listen, whether you hate him or love him, I think you have to at least be intellectually honest and say that he's not the same as everyone else. He may make the same mistakes. I don't know what's going to happen. He may screw this up. He may take an initial good move and then blunder, his queen to a pawn. I don't know what's going to happen. But for right now, I think you have to give him the benefit of the doubt. So with that said, in that setup, I do think from a market perspective, this is going to do a lot of things, Greg.
I agree.
Oil, I think you're going to see oil maybe spike temporarily when the markets open on Monday. This pod will probably come out on Tuesday or Wednesday. So we'll see if I was right or wrong. But then I think over time, you're going to see oil prices come down a lot. I think you're going to see gold probably go up as well because there's going to be just more risk out there in the markets. But I think in general, you're going to see an acceleration of Russia-Ukraine peace. And I think you're going to see a easing of tensions across the board because people just saw that Trump's not messing around. He will go in, he will take action, and he'll do it decisively. And I think that's going to be good to calm markets down and not have these constant erratic ups and downs that we really saw throughout 2025, excuse me.
Those are really interesting points, Nick. Another thing it might do is it might cause some geopolitical tension in that area, right? And so when I look at from a market perspective, as traders, we should be a little bit, I hate to say this, but excited about all the geopolitical tension, the oil shakeup, because Because as option sellers, we need volatility, and we haven't had volatility for 2 or 3 months, and that's reflected in our profit and loss statements from December and November, which we'll talk about later. But this has the potential of injecting at least some volatility into the market, which will be great for us premium sellers, right?
Yeah, no, I agree. And again, I think the market will actually celebrate this in general. And, there's this notion that when we talk about volatility, that means stocks going down. And that's a misnomer. Volatility does not mean markets going down. Volatility could be FOMO can cause volatility, right? We saw that with MicroStrategy, we saw that with GameStop, right? So obviously black swan events can create volatility, but volatility is not market go up or down one direction. It's agnostic. So I do think the markets are going to celebrate this coming week. The Venezuelan people are extremely happy. They're celebrating all around the world, but you're seeing a paradigm shift right now in South America. We've got Argentina, right? They've essentially voted out communism. Venezuela is essentially about to do the same thing. We see what's happening with the president of El Salvador. So there is a wave of change that's happening in South America. And I think South America is so rich in natural resources. They have an opportunity to really set themselves apart economically. And I think that's only going to help the rest of the world. And selfishly, it's going to help us in the United States. It's going to help companies like Tesla to have access to more natural resources or rare earth metals and not be so dependent on China, right? It's the biggest irony. China thought that they had so much power against the rest of the world, but COVID unleashed this decoupling from China from every single company, every single country around the world, and it hasn't stopped.
Yeah, that's really interesting. As traders, hopefully we've all had a lot of buying power on the side, right? We've been talking about this for a while because volatility has been so low that we have not put a lot on the table. We've been doing a lot of SPX, which does not carry over from one night to the next. So every day you start fresh with your buying power.
Can I stop you there for 2 seconds? Just I have a feeling there's at least one person out there who's going to say, "What do you mean by buying power?" Can we just so we're all speaking the same language? Can you maybe explain what that means?
Yeah. So for an option seller, you have to have a margin account. If you didn't have a margin account, your buying power would be just the amount of cash that you have in your account. If you're an option seller, most brokerages, if not all brokerages, require you have a margin account. And that doesn't mean you have to be actively using margin. But what that means is if you are selling puts, naked puts, to sell naked, you need margin. But what it means is if you're selling puts naked, you have to be able to have the cash to buy those shares if needed. And if you don't have that physical cash in your account, you have to be able to borrow that on margin. There's also another type of margin. It's called portfolio margin. That's more of a risk-based analysis on how much margin you can have. So there's two types of margin: portfolio margin, and I think it's called account margin. But that margin, whatever your margin allotment is, either the portfolio margin or it's called Reg T margin. That is your available buying power.
Yeah, and the only thing I would add to that is, if you say you had no trades on and say you had no positions, your buying power would be whatever cash you have, right? As you place positions, your broker, whether it's Fidelity, we use Tasty Trade, Interactive Brokers, they will go ahead and allocate a portion of your buying power to whatever that position is. Mm-hmm. Normally, if you sell a trade at a 20 delta, they'll take 20% of whatever that total amount would be if it exercised at the full value, and they'll reduce that from your buying power to be able to place another trade. That's the broker's way of making sure that you don't overtrade or get too big, and it protects the brokerage, right? They're always going to protect themselves, but it also allows you to know where you're at. So when we're saying buying power, we're saying the amount of available capital you have to place a new trade. And so when Greg says we've had a lot of buying power, really what he's saying is our trades have been either less trades in general or even smaller than normal. Right. Therefore, we have so much capital out there to be able to trade with that we just haven't used yet. So I hope that wasn't too long-winded. I just really want to make sure that you guys, because we're going to talk about buying power a lot. We're going to use that term over and over and over, not just this episode, but in the future. And we want to make sure that you're following along with us and understand what we're saying. We're not just saying things and none of us are speaking the same language. So apologies.
No, that's a great explanation, and it's important that we talk about each of these ideas and concepts as they come up, right? But what we teach in our course is when volatility is super low, you want to have a lot of buying power available. And why do you want to have a lot of buying power available? Well, two reasons. One, if you have used all your buying power, you have a lot of trades on, and volatility is very low. When volatility expands and causes premiums to get larger, you are taking on losses as a result of that. Or you're not necessarily going to take a loss on that. You might not close the position, but your position is going to go underwater. It's going to go further into the red because those premium values are expanding. But the second reason is you want to have buying power on hand to take advantage of volatility expansions. And what causes volatility expansions? Well, that would be binary events, like for an individual stock, it could be getting close to earnings, right? Approaching a binary event, or it could be on market wide. They're going to be large scale macroeconomic events, just like we're seeing right here.
You know, it's one word that I use to think about or to equate to volatility.
What's that?
Anytime there's uncertainty.
Risk or uncertainty?
Uncertainty.
Yeah, uncertainty is right.
Right? You don't know what's going to happen with earnings.
Yeah.
There's rumors of this company buying this company. Supposedly there's a big release coming out. Tesla might be launching a new car. Elon might be selling shares, right? Uncertainty. The market doesn't like uncertainty. Will they cut rates? Is it going to be a good jobs number? Uncertain. What's going to happen with Venezuela now? Is Russia or China going to do anything? Uncertainty.
It's interesting that you say that. When on the drive over here, I was talking to my friend Grok in the Cybertruck, asking him about a few things about Venezuela and the stock market in times like this. And I was talking to Grok about what did the stock market do when we invaded Iraq in 2003?
Oh, that's a great question.
Yeah, and so what my friend Grok said is S&P 500 dropped 5%. It was like March 3rd, 2003, something like that. Dropped 5% in that first week. And then by the end of the first month, it recovered 8%. So it's positive 3% on that month. And the reason is not because of the economic turmoil that going into Iraq caused. It was a period of uncertainty. Are we going to go in? What's going to happen? What are we going to do? Followed by a period of certainty, which is we're invading Iraq.
Funny enough, whenever in 2022, before Russia invaded Ukraine, Russia was lining up troops along the border nonstop.
I remember that.
The market was so chaotic. The day Russia invaded, the market went up.
Uncertainty. It's going from a period of uncertainty to a period of certainty. So that's super interesting.
And it's one of the reasons why I actually think on Monday, again, you guys will see if I'm right or wrong. Like I don't know what's going to happen Sunday right now when we're recording, but I think tomorrow will probably be a green day because we pretty much have the certainty. We know how it's going to go. We know U.S. is already out of there. Trump has said that we're not going to do anything crazy. We're just going to we want transition of power, just in and out. This is not a war. We're not doing regime change. We're just arresting someone who the whole world agreed was a narco terrorist. I said it slowly so I wouldn't screw it up. So I think the market is going to have the certainty they're looking for. And they did it over a weekend, which is smart. Trump tends to do a lot of this chaotic stuff over a weekend so that doesn't affect the markets. It's one of the nice things about having, again, love him or hate him, at least he's friendly for the stock market.
Right. Yeah. Well, not always, but he has been recently.
I mean, if the market's going down, he's going to do something to stop it.
Yeah. Yeah, that's true. The other thing I wanted to say is, from a macro perspective, it gives us a lot of volatility. But going into next week, what I'm going to do is I'm going to be very careful in the energy sector. I'm not sure that we might see big spikes in volatility in Chevron and Exxon and
for sure
Canadian oil stocks. But I would be very careful there because we don't know what's going to happen, right? We import the most amount of oil from any other company from Canada. You paused.
You said company instead of country.
Oh, country. Apologies.
Yeah, I was like...
Yeah, country, Canada. And we don't know what's going to happen there, right? We don't know if those stocks are going to beat up or not. But I'm going to be very careful around energy companies. But I am looking forward to the volatility.
Okay. So just a hypothetical. Let's say Shell or BP have an IVR of 95. You gonna touch it? You gonna sell a little premium? You say this now, but right. You see that juicy premium. You can get extremely wide. A 95 IVR. What's Greg doing? You taking a little trade at least?
Yeah, I mean, if I can get wide, I will. I think it also. I mean, I don't do a ton of technical analysis in terms of seeing where resistance levels and things like that are, but I do use it as a guide sometimes. And I probably would see where the resistance levels were in those companies and make a decision then. But I'd be a little careful. I don't like trading. I learned this trading MicroStrategy early last year. If the volatility is too high, if IVR is 90, 100.
Well, that was like 110, 115.
110. Yeah. That's too much volatility. Yeah. You do want a lower bound on volatility. You don't want to trade something that has a 10 IVR, but you don't want to trade something that has 110 IVR either.
Yeah. No, I think that's well said. So just to sum up this topic, everything's happening with Venezuela, Trump, all that. Love them or hate them, doesn't matter. We anticipate that there will be more volatility injected into the markets next week, coming weeks. At the very least on Monday, there's probably gonna be more juice into the markets. We agree, and it's if we're honest with ourselves, it's probably the real first trading day of the year because Friday was kind of. I mean, who was actually working on Friday?
Let's not even count that day.
Yeah, exactly. Well, that's what I'm saying. I mean, yeah, and we especially because we had a little oopsie, and we'll talk about that in a second. But it just in general, most people like on Wall Street they took off,
right?
And just a word of caution in case other people are going to go talk to your friend Grok. Keep in mind, while it's interesting to understand what happened with Iraq, everything wasn't really, it's not really apples to apples, right? We didn't know how long we were going to be in there for. This was post, obviously, 9/11, where Wall Street was hit, right? We were actually attacked and we were hit, right? So there's a lot of other messiness in there. And we had 10 years of essentially a stagnant stock market after that. So, it's, history rhymes, but doesn't necessarily repeat, as, the cliche says.
Right.
But so volatility, can be careful. You're not necessarily going to dive into anything, but you'll see if there's any opportunities.
That's right.
Okay, cool. So let me see, what else do we have here on the docket? Okay.
Let's talk about our months, huh?
Yeah. So Greg, maybe you can lead us off on this. How'd your month end? And then I think we're going to talk about what strategies, what underlines made up that month and how we got our P&L.
Yeah, so December was very surprisingly my best month ever.
Ever?
Yeah, $64,500.
Cheers.
Cheers.
I didn't know that was your best month ever.
That's
Congrats.
my best month ever. That's right. And what's interesting about that is it was like I said a few minutes ago, it's an extremely low IVR environment. So as primarily an options seller, I should not have had my best month on a low IVR month. So what I did is I looked at my P&L and I broke down where my profits came from in December. So I thought this was really interesting. Of the $64,000, $1,000 came from our bread and butter 45-day trades.
Wow. Okay. So it's not the only thing we teach in the options crash course, but it's a heavy part of it is the 45-day strategy. Mm-hmm. And you're saying only 1,000 of your 60 something came from that.
Only 1,000. That's right. And typically on a typical month, 75% comes from 45-day trades. 45 days trades are our bread and butter. They are the foundation of your trading strategy. But IVR was just so low in December that that's just the way it went in December.
And if you don't know what we mean by 45-day, it just means you guys should go sign up for our course. Because it all makes sense to you.
Yeah, it all makes sense to you. So then apart from that, we talk about, or I feel like I'm always harping on my pillars of competence.
No, keep it up. These pillars of competence, I did an interview with Dr. Jim Schultz. He's one of the taste trade guy. He has a background in academia when it comes to finance. He's got a doctorate in finance or whatever the entire title is. And he's pretty prolific in the options world.
Very much so.
And when I mentioned the pillars of competency, he was like, I like that. I'm going to take that.
Yeah.
Oh, okay. So you lost that.
He liked my term. I was like, ooh, Dr. Jim likes my term.
I think I gave you credit for that too.
I think you did. Yeah, I think you did. But going to the pillars of competence, it's actually this month is a great month to talk about the pillars of competence. Why? Because I say my pillars of competence are 45-day trades, bread and butter, covered calls, 0 days, and occasionally when IVR is low, buying leaps at the money, right? Those are kind of my 4 pillars of competency. And other than the 45-day trades, which I didn't have a lot of profit in because IVR was so low, all of the other trades worked out phenomenally. Mm. And that's, Nick, that's kind of the importance of having several pillars of competency. And so let me just break these out for you. SPX, which was by far my...
And when you say you mean 0 day.
I apologize. Yeah. My 0 day trades, which I was doing in SPX, were 12,700 of that 64,000.
Nice.
And that is, again, was my best trading strategy of the year were 0 days.
Oh, of the year.
Of the year were 0 days.
Okay.
Yeah. So we have that, and we'll be putting together a course. We're putting the final touches on this course that we're going to do on 0 days.
Yeah, I'll be honest. Him saying we've been building is him being very gracious. He's been building it. I have one example that I'm supplementing, but this is really Greg's kind of brainchild. So yeah, you're working on it. We're wrapping up the 0 day. We're gonna kind of beta test it with Ben. If you guys have joined the course, you guys know Ben. He helps us in the background, and well, not background. He's on camera, but he helps us out. So we're gonna try to test it with Ben, to make sure figure out where we're missing certain things, and then we're gonna go ahead. We're aiming to launch it in February so that people can start trading 0 days in a safe manner, right. Understanding discipline, right? Not just, I was on with the Tesla Bulls a couple days ago. I'm the young prescient bull is the title.
Impressionable or
no, prescient.
Prescient? What does that mean?
Essentially make good predictions of things to come before they happen. But, I kept harping on these courses, and I probably sound like I'm trying to sell it. It's not. I've seen so many people in the Tesla community get screwed over by buying leaps, buying far out of the money leaps. People who are upset that they sold some covered calls and all their shares got taken away and they didn't actually understand what they were doing. And as I've taught more and more people and we've, kind of brought more energy and life into these courses, I almost feel like a sense of duty now to help people from destroying everything that they've worked for.
Right.
And it sounds so lame, but I almost feel like a sense of responsibility that we know something and we know mistakes people are making and we have the antidote. Should they decide to take it, they have to take it. Then it's their choice to make decisions. But we're sitting here saying, hey, at least take a look at our antidote.
Right.
And so anyways.
Yeah. I mean, you got to put in the work when it comes to learning options. Yeah. If not, it can be a powerful tool. They can be a dangerous tool. They can be a profitable tool, as we've seen. So yeah, 12,700 on 0 days. Very happy with that. I also, we mentioned leaps, and we were talking about this on the last week's episode as well.
I know. Why was I driving?
Well, yeah, explain that story in a second. But so I put on some leaps on both Tesla and Meta when Meta's IVR was like a negative 0.4 or something like that. And they were trading at like 20 times earnings or something.
They were at a 30 to 35% discount.
Yeah, they were 30%
from all-time
discount.
highs.
Yeah, from all-time highs.
No brainer of a trade.
So I put on some Meta leaps. I also put on some Tesla leaps because IVR in Tesla was also very low. Those contributed my profit this month. Both of those panned out very well. So that was about a third of the profit. And then covered calls on Tesla really profited for me this month. Covered calls Tesla was kind of doing a little bit one of these all month. And so I was able to roll down, roll out a little bit, roll down. And at the same time, I had equal weighted puts on the other side, about the same number of puts that I was carrying. Remember, we were talking about IVR is really low, so we're holding a lot of buying power, a lot of cash. So these are effectively, I had strangles on, but really I thought of them differently because we always teach that you should think about each side independently, right? You don't have a strangle on, you've got a call on and a put on. And there's very significant reasons for that, and it'll help you make better decisions. But so an example of that here is I had puts on, I had the same number of puts on that I had calls on, with the idea of, with all this cash that I have, Tesla goes down to whatever it was, $3.95 a share. Okay, I'll buy those shares very happily. So I was able to roll those up. I was able to roll the calls down, and then eventually I rolled them out and kept doing the same thing. And so that contributed about another third to my month.
Wow. So that alone was about 20 grand.
That alone was about 20 grand.
Yeah. And that's, you could argue, I know there are covered calls and cash secured puts, but you could argue that could fall under the 45 day.
Yeah, absolutely. Right. I mean, I do sell those at the 45 day or around there.
Exactly. We're using all the same principles as the 45 days. Like your entire strategy was still the 45 days. The only difference is you had the shares and you had the cash available.
Right. It's funny how you frame these in your head, right? When we say 45 days, that doesn't mean we always sell them at 45 days. Maybe we sell them at 35, maybe you sell them at 60 sometimes, depending on where the monthly expirations are, or where the premium is, or when the earnings date is, things like that. But yeah, you frame them kind of differently in your head, right? Those covered calls and those cash secured puts were essentially 45-day trades.
Yeah. If anyone works for Pellegrino by any chance, we'd love to get a sponsorship. No, I'm kidding. Well, not really. Or any good bourbon companies. We love our bourbons. Well, that's fantastic, Greg.
Yeah, thank you.
So, man, so you had a really good month. So your leaps became profitable. You didn't sit there and wait to get a 300% return. You literally timed everything perfectly. But I would say you didn't time everything perfectly. You stuck to our mechanics.
We stuck to the mechanics, and you mentioned a really good point, Nick, which is with the leaps, you have to play those a certain way.
Yeah.
And I think you have a story here that you can tell us about how to optimally play leaps. Why don't you tell us that story?
So I have a philosophy. So, we talked about we like to buy leaps whenever IVR is low, and that's really simplifying what all we look for, because obviously we don't have time to cover everything. We will add that into a course in the future, but just for the story's sake, everything was set up. We both had our leaps on Tesla, and I have this philosophy that you really only get one, maybe two shots to take profits on a leap. And when you see green, you need to take it off. And some of the saddest stories that I've heard in the Tesla community is that they were up so much on their leaps, and the stock started going down, and then they kept it, and then it went red, and then it went negative, and then went to zero, right? That's a crazy story. But so that's one of my rules, that like once it's in green, I don't mean like it's in green by $2, but it's a decent return, right? Take it off. Like if things feel, we know what to look for. If things feel like they're getting toppy, and everything that we look for is saying, hey, I don't know how much higher we're gonna go here, take it off. So, I was in the car, I don't remember where I was coming back from, the dentist maybe, or a doctor appointment for my son. I don't remember where, but I remember I was sitting there looking at my phone while FSD was on, and I see that we're going up. I quickly look at my brokerage account. I see I'm up like $15-something thousand on the leap, and I call Greg, and I'm telling him. He's like, I call him. He answers by saying, "You're thinking about taking off the leaps?" I said, "Yeah, I'm thinking about it. I'm like 15 minutes away from the house, and I'm thinking when I get there, I'm just gonna take it off." Get to the house.
I was not going to take them off, by the way.
Oh, you weren't?
Well, remember, I was like, oh, I don't know. I'll probably leave them and thinking about it. And then we hung up. I closed mine.
Oh my God. So by the time I got home, back at my desk, we were already down. Those leaps went from being up 15 grand to like being down, I don't know, like 3-4 grand. I was like, are you kidding me? I just missed my shot. So I still have those leaps. They're still there. I mean, they're good for a while. I mean, I don't even know if I call them leaps because it's not a full year anymore, but they're still there. Greg's out. Greg has a profit on it. I'm sitting there waiting like, all right, well, did I just screw that up? So here we are. That is, that's life. But at least the silver lining is my mechanics once again proved to be correct. Even if the stock would have kept going up and you could have made more money, you made the right decision. You took home 20-something grand. Like that's...
Yeah. And you've talked about this before, that it's really hard to close profitable leaps. And the reason it's really hard to close profitable leaps compared to selling options is because when you're selling options, you have a max profit.
Yeah.
And so when you're at 50% max profit, you'll roll it or you'll close it. When you're at leaps, you're like, all right, I'm up 20%. Do I close this? Do I keep it? Well, my system's telling me to keep it open, but I want to take the profit. It can be really hard to make that decision.
Yeah. Yeah. I mean, with the leap, you're right. Like when you buy an option, you can go up 100%, 200%, 300%, 400%. When you sell an option, your upside's capped.
Yeah.
So it makes the decision really easy to take a winner off the table.
Yeah.
You don't have that FOMO or that excitement or that what if kind of voice creeping in your head. But so, all right, so let me give you a breakdown of mine.
Yeah, let's talk about your month.
Mine wasn't as great as yours, but it was still a great month. I finished off at $44,000, so pretty good month.
Congrats, that's awesome.
7,000 of that was 0-day SPX. So,
Okay.
Not too bad. I don't think I did any SPX trades for the first 2 weeks. Mm-hmm. So I probably should have, but...
Did you have any losing SPX trades that month?
No. I've only ever had 4 losing SPX trades in my entire time of doing them. And yeah, we'll talk about some losers in a second here. 16,000 was from Meta, trading Meta.
What kind of trades?
I guess you consider them covered calls against my shares. So Greg was mentioning how Meta was at a very low IVR, down 30%, right? So in seeing that, I sold a bunch of puts. I had those puts kind of aggressive. I finally got assigned those puts, and I was able to sell cash secure, I was able to sell covered calls against them. And I was just milking that, just waiting for the stock to come to me over and over and over. And then, that gave me 16K in profits. And then the rest was 21,000 in just, our bread and butter, 45-day trading. So it was a nice, it was a nice breakup, it was a little bit of each bucket.
That's really interesting that you had 21,000 profit on our bread and butter 45 days, and I had $1,000 in profit in our 45 days. I wonder do you remember what underlyings, and by underlyings I mean what stocks or what equities or futures or what you were trading in, what the underlying asset was that you were trading those options on?
Yeah, off the top of my head, obviously Tesla, Palantir, Nvidia, had a little Apple in there. So I can think off the top of my head, but I didn't have a lot on, like, in general. Like, my volume was very, very low. This might have been my lowest volume month of the year. I only did like 50 something trades.
Yeah.
And yes, IVR was low. That's part of it, but it's also the holidays, right? We were in Boston for like 10 days, and I wasn't doing a lot of trading in Boston. I was trying to enjoy our time there. So I wasn't doing like any 0 days. The whole first 10 days we were in Boston of December. And I was just kind of just managing the trades I had on, right? Just letting them work. So I wasn't doing too much. But yeah, so I mean, it's still, with my lowest amount of trades for the year, still closing out 44,000. Like, that's
pretty good.
That's pretty good.
I wonder if our trades were more similar than they just sounded, because like we were saying, my Tesla ones, I bucketed them into 45 days, or I bucketed them into covered calls and then puts that I was willing to be assigned on when they were really 45 days. And that's where a lot of my profit came from. I wonder if yours was the same. Most of it came from Tesla compared to Palantir or Apple. And, and your breakdown, you classified those as 45 days.
Yeah, I didn't break. Maybe I should have done that, broken down to 45 days. But we decided to break that down just before hopping on. But I think maybe 25 to 30% of them were Nvidia. Maybe about 10 or 15 were Palantir. I forget, Apple. I don't know. But yeah, I would say probably 50% of those, maybe a little less, 50% were just Tesla. So
I was going to ask you before we talk about these losers that we keep teasing here.
Yeah, we're trying to avoid a topic.
We don't want to talk about it. No.
We gotta keep you guys, keep you suspenseful
engaged
about this.
What not to do.
All right, go ahead, and now let's get into it.
Well, before we get into that, I was going to ask you, what are you thinking going into next week? Going into next week is the beginning of next month.
Oh.
I mean, we had Friday that we traded, but maybe you do have an answer to this question, but that really changed yesterday, 2 days ago, because volatility is now probably going to be significantly higher. We might see higher volatility in the 0 days, might see higher volatilities across the board. We don't know. I guess we'll find out tomorrow morning.
Okay, so I'll tell you something. You don't know this yet.
All right.
So you're going to learn this live with everyone.
He's getting into crypto, fellas.
No. And ladies. So I had leaps. I still have. I have a lot of leaps, right, on Tesla. In order to kind of minimize the cost of those leaps, I sold calls against them with the same expiration, right? Mm-hmm. Essentially a debit spread. Mm-hmm. Well, with this recent pullback in Tesla, all the way down to 440, I think we went down to 436. Well, I know we went to 436. When we hit 436, I took profits on all those covered call leaps. I don't know.
That's interesting. I've done that before too, and go on. But at some point, maybe during this conversation, maybe another episode, we should talk about doing that.
Yeah. So I took profits on them just because when I initially put those on, I was a little unsure if I wanted to keep them on. But at this point, I feel pretty strongly about what's about to unfold with robotaxis. And listen, I've been wrong for 5 years on this. And so I'm right, insanity's doing the same thing over and over, expecting different results. Well, here I am again. I think this time's different. And I didn't want those leaps to be capped on the upside. Mm-hmm. And so when I saw an opportunity, right, because Tesla's been going up. So as it's going up, those calls I sold are going negative, right? Which is what you want. Right? That's how I want the trade to play out. Because the idea is my leaps get capped, right? So in this case, my leaps, I could only make $120,000 on them, because if they got up to, I think it's $600, they would, the covered call leaps, those are at 600 and they get taken away from me. So the most I could make was 120 grand.
Right.
But because it came down, well, those covered call leaps, again, I need to think of a better term.
Are these poor man's covered calls you're talking about?
It wouldn't be considered a poor man's covered call. We can talk about that later. It's a debit spread. But
it's similar. It's a similar setup. It's not exactly, but it's a similar setup.
Yes, I would agree with that. But because I saw those are profitable and I have a certain opinion about tests right now, I decided to take the profit, take them off, and uncap myself on the upside. Now, with that said, it is kind of risky what I did.
Yeah.
Because I think Tesla's also at a certain point where if we continue to go down too much more, I'm just going to close out my leaps, take whatever loss I have on them, and not ride them down. Mm-hmm. Right? I want to protect what value I have in them. I don't want, and this again is a strategy that, we'll teach eventually, but I don't want to sit there and ride those leaps down to deeper and deeper negative. I'd rather take them, take the temporary hit. It's going to happen. It's part of the game. And then I will reestablish. If it keeps going down, it's going to keep going down. And I don't want to ride it all the way down. I'd rather take a little loss, reestablish, go wider, and get ready for the next setup when all the criteria make sense. So that's kind of what I did recently. I am getting pretty bullish. I feel like Friday was an anomaly of a day. It was low volume. I think people were potentially selling to book profits that they didn't want to be taxed on for 2025. So they might have just done it in 2026. And I think that we're going to see good stuff out of Tesla soon, especially when it comes to the autonomy space. And really the biggest risk for Tesla is out of the way now, which is those delivery numbers. Mm-hmm. And that was the other reason why it went down, is the perceived issues with that.
Right.
So that's where I'm at right now. I still, subject to change my mind before Monday, but that's where I'm at.
That's interesting. I want to just double click on what you did there when you said you closed the side that was profitable and left the leaps on. You sold the short side at a profit and left the leaps on.
Yep.
And so I don't want to harp on this too much because I know we have stuff to cover, but I find that interesting because I've done that with credit spreads before, where if you like a defined risk trade, you do that because you can cap your downside. It's safer, requires less buying power. But I've done that before where I was pretty confident that although the position was moving against me and the long side of it, this is supposed to be protecting or minimizing my risk, was getting profitable while my short side was losing value at the time, I was pretty confident that the short side would expire outside of the strike, outside of the money.
So you had a put spread on.
Yes. So
for example, bought a put and you sold one at a higher strike.
Exactly.
And so that sold put was becoming profitable, but you thought,
the bought put was becoming
the bought put was getting
profitable.
profitable, But that sold put, you're like, I'm not too worried about it. I think this is going to expire outside of the money. Let me take the profits from the bought put and go naked again.
And that's right, exactly, because another way to frame this is usually we sell strangles because they're more profitable.
Yeah, naked strangles.
Naked strangles. An iron condor, or if you're only putting one side of it, it'd be a credit spread, is a defined risk trade. It's got different features to it, but typically I would normally put on a strangle. So when I took off the long put side, it just turned it into the bottom half of a strangle, which I would normally put on anyway.
Yeah.
So like I'm profiting on that long put, and I'm still in the position that I would be in otherwise if I put it in a strangle. And so anyway, the few times I've done that, it's worked out, and I've made profit on both sides of it, which is pretty interesting.
The only difference between yours and mine is that you were confident that it was going to be above the strike.
Yes.
I won't lie. I'm not confident that we are going to hang out at 440, 435 and not go a leg lower. I'm not confident in that.
Right.
I feel like we're at a very interesting level where we either need to bounce back up from here or we might be
I think
going lower.
The concept that we're talking about right now is a little bit better to do that with a credit spread than it is with a debit spread.
Yes.
Because when you're doing it with a credit, and I know we're getting into the weeds here, guys, I apologize, but these are things that we teach in the course, but a credit spread, when it's going against you, you close out the long side and you're just leaving the short side, which is what you wanted from the beginning.
Yeah.
When you're doing a debit spread, you're closing out the short side, which is kind of the more reliable side, and you're leaving on the call side, the long side, which is a little bit more of the, you're less certain that it's going to get where you need it to go.
Exactly. And just to, I guess, throw some numbers at it for people so they can think of in their head. So I paid 150 grand for the leaps, right? So 150 grand. But when I sold the call against it, it gave me 50 grand.
Of buying power.
No, it gave credit.
Okay, premium.
So I paid 150 to buy those leaps, sold the calls, that gave me 50 grand. The delta between the strikes at expiration would still net me like 120, 125 grand. So it caps my upside, but in the worst case scenario, I don't lose 150 grand, I only lose 100 grand because I would keep the call side premium at expiration.
Right.
So that was the logic there when there's more uncertainty. And granted, there's more uncertainty now, but kind of like you were like, yeah, I kind of feel like it's a little overdone. I saw some green, I took it. I can always put it back on. If we move up higher, I can always put it back on again and get even more premium, or we keep going down. I just close out, take my loss, right? I got to see what Tesla's going to do. I got to see what the market does, and I'll make my decisions. I know my mechanics, so it's not too much thinking. It's just, what's the market going to do? Based on what the market does, I execute my mechanics.
Absolutely. And that's why it's so important to stick to those mechanics. All right. So you want to talk about our the little failures we had the first day of the trading month?
Yeah. Here, how about I tell you guys what happened to me,
right,
and then you can say what happened to you.
Okay.
And you don't know part of my story, so you're going to hear this for the first time.
All right.
So we have a strategy with 0-day options that we implement. You know what? Why don't we talk about like the pain, and then we'll talk about the funny part at the end.
Okay.
Okay.
All right.
You get what I'm saying?
Maybe.
Right. Okay.
Let's not leave emotional with the pain or the figures.
No, all of it.
Okay,
yeah.
all right.
But let's leave the punchline to the end.
Okay.
Okay.
Right.
So follow me. It all makes sense. So we have a system for trading 0-day SPX options, and I don't know how many you've done, but I've probably done, 200 something more trades.
Yeah.
And I've only ever lost 3 of those trades until Friday. Friday was my 4th time ever losing money on the trade. Now, we always preach, there's nothing wrong with having a loser. You're going to have losers. Nothing's 100%. The question is, do you have the right mechanics? Do you know when the market goes against you, when you're going to take your loss, so that you don't have to think about it. You just follow the process. And listen, I did not follow my process, Greg.
You didn't.
I followed my process for entry.
Okay.
It was essentially a textbook entry. It was
Yeah.
a beautiful entry. But I would say I didn't follow my process because it had been so long since I experienced any real maybe consternation when it comes to any 0 days, that I decided to take the loss quicker. Because I didn't want to deal with it. It was a Friday, day after New Year's one, or first day of the year, first trading day. And it just felt like, the market's just going to keep dumping. And so I went ahead and just closed it out of the trade. It's like, no big deal, 2K loss. I'll take a 2K loss. It's not that big of a deal. And so I had some other trades that I closed out as well for profit. So really, I was only down like $400 for the first trade day of the year. So I was only down $400, Greg. It was great. But then, I talk to you, speak to you, you make some jokes in my way, and sure enough, the market gives me another opportunity to get in. Beautiful setup.
This is the part I don't know about.
Yes.
Okay.
You don't know about this part. Beautiful setup, everything. I'm like, okay, here we go. And I decide, okay, well, let's put a trade back in. Went a little bigger this time. Okay.
Okay.
Nothing too crazy, but I've been trading SPX really small lately, but I did our standard 20 contracts.
Okay.
Well, then the market started to go down again. And I got scared, maybe the right word, but I got concerned that I was what they call revenge trading, where I was trying to make up the down $500, $400 to start the year, and it's like, oh, I want to make this up. I want to claw back the loss.
You were concerned you were on tilt. To use poker terms.
I was concerned I wasn't making right decisions for the right reasons.
Okay.
And so when we started to come back down, I said, no, you know what? I'm just gonna take this off. I'm not doing this. I have more contracts on. I'm not doing anything smart, and I took another $3,500 loss because in my mind, I was convincing myself, oh, you're not being mechanical. You're making bad decisions. But if I'm being honest with myself, I think I just got worried that this was just gonna be a really bad red day, and so when I was down 3,500. Maybe 3,600, I close it out. And so now to start the month with one trading day so far, I'm down $4,100 for the month. And again, if I'm being honest, I didn't stay mechanical.
Yeah. I mean, but here's my pushback to that. There are so few days on 0 days that give you that consternation. Whenever you experience it, it's a visceral feeling. You feel it, that means just get out.
Yeah.
Get out. Like, yeah, you got out earlier than you would have on that second, maybe you should have on that second one, but that's okay. You stayed safe. You had a small loss that's going to be easy to overcome throughout the month, and you're going to end up with a super profitable month, I'm sure. So I think that's, knock on wood, right? But that's much smarter than taking a risk where you had on 20 contracts after closing out those first 10 that could have put you in a situation where you're down 25 grand because something happens, the things happen. So I think getting out safely with a small loss is the best thing you can do in that situation.
Well, I appreciate that.
Yeah.
Why don't you tell us about yours, and then I'll give the punchline.
Okay. So very similar setup. It was actually funny. I called Nick, or I sent him a text, and I was like, hey, anybody, actually to our whole group, Junior, Donnie, and Nick, I was like, hey, anybody putting on SPX? I'm putting in SPX. 0 day when I say that. And Nick's like, yeah, I put it on the strike. I had put it on the exact same strike, so we're in the same boat together. A little bit different what I did is when there was a second entry point on, a little earlier than you put your second entry, I also added another 10 contracts. So I had 20 on as well. But I got to a point where I felt like exactly what I was saying in response to your trade, that you should take, if you're in a 0-day trade that is starting to give you a little bit of heartburn, and you find an exit, an off ramp at 0 or down a little bit, whatever, just get out of it, because there's 29 other days in the month, not all our trading days, 19 trading days left in the month, something like that. Yeah. And so you're going to make your money on those days. There's so few and far between days like that with our system. So yeah, I took a 4K loss. I had
yours is 4K too?
I think it's about. I think it's about 4K. It's about a 4K loss.
Can't make this up.
Yeah. But I had another loss that same day, and I have something to say about it. But why don't you give the punchline before I do that?
Yeah. So, well, hold on. Why'd you close out? Just because you felt uncomfortable?
Yes.
Okay. So here's the punchline.
Well, sorry. To add one thing to that, I have a rule to myself. Whenever the market on a 0-day is trending in a certain direction, and that direction is going against your trade, that is a good day to just ignore I'm going to close out at these preset mechanics and just say, this isn't the day for me. We're getting lower lows in the negative direction, or making higher highs on the positive direction, and that's going against my trade. Even though I'm not at a point where I feel like I need to take this loss, again, on those days, they don't come very often. Just get out of it, go fight the next battle the next day.
So you and I have essentially the same mechanics for entry.
Right.
But as far as closing out the trades, you, me, and he said Junior earlier, and then he said Donnie. Same person. He's Brazilian. His name's Donietz. Sometimes we call him Junior. Sometimes we call him Donnie. So just so you guys know, there's only 3 of us, not 4 of us. People probably don't care about that, but I felt like I needed to say that.
Well, we talk about our trading community a lot, and that's our trading community, so it's important.
So one of the ways I exit is based on a certain amount I'm down as it relates to a certain time of day. And that's where I broke my mechanic rule. And I broke it in the right direction, in the more conservative side.
Yes.
Not the taking a bigger loss side. But the irony is, had Greg and I would have just left our trades out, our entry mechanics worked so well that our trades actually never got tested.
No.
They actually were pretty far away from getting tested, and we would have closed out completely profitable.
Yeah.
But that's I think the punchline.
I'm totally okay with that.
No, I know, but it's a testament to our entry, and maybe also to us getting better about taking losses quicker.
Right.
And I'd rather flex that muscle than not.
Yeah. Yeah, 100%. All right, let me tell you about this other trade that first trading day of the month, I take 2 losses, but I was able to roll down some covered calls on Tesla, and I cut into that. So I think I ended that first trading day with about $3,500 down for the start of the month.
So you're down $3,500 a month? Okay, I'm down, I think, if I can see it from here, about $4,100. So let's see how we end the month. Hopefully that's not a bigger number. I look like a fool right now, right. But let's go from there. But again, guys, this is trading, all right? You've seen us talk about every single month we've ended with huge profits. Sometimes they start like this. So we'll see how it ends. We're gonna go through this together. We don't hide anything. It's as transparent as can be. We're being honest. We're being vulnerable. Our families can watch this. Our friends can watch this. Right.
So my other trade was in Baidu. So Baidu is, if you're not familiar with it, it's like the Google of China. They do search. They do AI chip manufacturing. They do autonomous technology, autonomous vehicle technology.
Yeah, a lot of the viewers are probably big Tesla investors, and you would probably know Baidu as the deal that Tesla China did with Baidu to use their maps, much like everywhere else, Tesla uses Google Maps. Right, you can see it kind of in the bottom right-hand corner on your Tesla. It's kind of faded out, but that's Baidu.
Right, and so I had 45-day strangle on Baidu because it was one of the only underlyings, one of the only stocks that had at high enough IVR that I felt like trading this last month. So I woke up first day of the month, was that Friday, and Baidu had spun off their AI chip manufacturing sector of their company to go public in the Hong Kong exchange. And that caused Baidu to go up 15% overnight. So my call side, while it didn't go in the money, it got tested. And based on, the exit, the defensive mechanics that we have, I decided to close it. And, what's funny about that is I started the month with down $3,500 from those two trades. And then I made up a little bit on the covered calls, but I was sad about it all day. And what I think is really funny about that is there's no reason to be. Like, we had a phenomenal month in December. I made $64,000, and I'm over here like sulking about the fact that I'm down $3,500 on the first trading day of the month, on the immediately following month.
But let me add to that. You felt that way by design. We do this intentionally. Most people out there would have sat there and said, oh, I'm only up however much. They would subtract that from the 60-something thousand. We don't do that intentionally. Every month, we start back at zero. Every month has to stand on its own legs. That does two things. One, it keeps you from seeing all these other profits that you've made and using that to rationalize stupid decisions you made and not take accountability. That's one thing it does. But two, it makes you feel this way intentionally. This way you can self-reflect. People don't reflect enough in life, especially this time of year, right? People should be reflecting a lot, but it's by design. We try to stay humble. Every month we go back to zero. We have to start from scratch, and we have to earn our bread. We have to earn it.
That's right.
So,
and it was funny because I just listened to your episode from your Investing Against the Grain podcast with Dr. Jim Schultz. And he was talking about how every trader goes through 4 emotions during the day, and sometimes it's the week or whatever. But he was saying it's fear, greed, hope, and regret. And so when you're having great months, you're feeling the greed, you're feeling the hope. But those when things go wrong, you're definitely feeling the regret over the course of the day. It's important to feel those feelings and to understand what they mean, to keep them under control, and always trade with a level head. So I thought that was funny. I know before we finish up here, though, there's one thing that I wanted to talk to you about that this is unscripted, not unscripted, but unplanned.
What is scripted here?
All right, the whole thing's scripted.
I was going to say, I got like 3 things written on my iPad. I don't know what you got over there.
We didn't talk about talking about this, but I was appreciating that we learned to trade in a very isolated environment. We didn't have really we didn't know about anybody's profit and loss. We didn't know about how much money you could make selling options. Like, do you remember that when we were trading, we were learning through books and YouTube and stuff, but nobody ever talked about their profit, and there was no FOMO. There was no, I'm only up this month, this amount for the month, or I'm down this. Like, there's nobody to compare it to. We learned as a trading community, and we leveled up and leveled up and leveled up, but there was never any FOMO because we were kind of insulated in our bubble of me, you, and Donnie.
Well, do you remember what it was where you finally were like, okay, what are you doing?
Yeah, you had a $50,000 a month, and I was like, yeah. All right. Well, Dad, tell me about this.
So this is like back in the day when I kind of finally cracked the code, maybe, or when I finally saw the big picture of how this can and could work. And I first started off, I made $1,500 a month, and I think I told you about that. I'm like, hey, I made $1,500 this month. It's kind of cool. He kind of dismissed it.
I'm generally a risk adverse person.
Well, but you also, we went through losing money on leaps together.
Yes.
Right?
Yeah.
And everyone gets the benefit from the money we lost, so they don't have to, so that's great. I wish we had us back then, but we didn't. But so it makes sense that you're risk averse, especially after what we went through. And then the next month, I think I did like 12 or 13,000. I sent you that. I sent you, we were still in Fidelity at the time. I sent you a screenshot of that, and you kind of dismissed it again. And then I sent you the next month, like my third month of like, yeah, I really think I kind of got something here. And I don't know if it was 50. I think it might have been like $30,000 or $40,000. And I sent it to you, and all of a sudden you sent me a text. You're like, all right, what are you doing?
Yeah.
I'll never forget that, because I'm like, all right, because you're right. We were isolated. Like, I didn't know what was possible.
Yeah.
I was just figuring this out. And all of a sudden I'm like, okay, well, what if I do more of it? What if I do more of it? What if I...
Well, most option traders are there where we are.
Yeah.
Like the people listening to this have probably bought out of the money leaps, lost money on them, and they're like, this like options trading is just stupid. Retail investors are not making money on options trading. It's a terrible idea. That's not true. You just don't know how to do it correctly.
Yeah.
And there is a way to do it. To like, we made great profit last year and the year before. We have not had a year that we've lost money selling options. It's like, it really is a financial freedom tool if you understand it. You put in the work to understand it. So yeah, I think a lot of people maybe today are where we were or where I was when you were telling me about it. And I was like, I don't know about that. I don't know if I want to get into options again. I lost money on some leaps. It's not for me.
Yeah.
I'm glad you changed my mind.
Well, I mean, you changed your mind. I was just, to be honest, I was just like, it's one of those things where, you talk about doing things in isolation. I was in isolation. I'm like, I've got this information. I'm like, there's something here. I think I figured something out. And luckily my wife entertains me with a lot of this stuff. And, something that to be like, are you actually interested, or are you just appeasing me? She's like, no, that's interesting. And I think she does, because she, it's nice. We can actually talk about things with her, and she understands what we're talking about. But it was lonely. And, to be honest, I was trying to get someone else to like come on board with me to at least talk and bounce ideas off of. I don't know if I would still be doing this, to be honest, if I didn't get you and Donnie involved. I mean, maybe I would, but one bad month or one bad trade, and I might've been like, all right, I'm going to stop. It was all luck up to this point, and that's it. The learning lessons, like,
there certainly were learning lessons.
Oh yeah. I mean,
we learned a lot of lessons.
Think of how much we've learned from Donnie, right? Like, we wouldn't be touching 0 days if it wasn't for Donnie. We wouldn't really be doing any earnings trades if it wasn't for Donnie.
Right.
You had all the inverted stuff, so much of the cover call stuff. I mean, like, and I think you really nailed down the 0 days. I mean, there's so much that we've all contributed and learned, and we have all this information. I mean, that's the whole point of this podcast, right? Is to get this out there to the world, because it's not a fixed pie. No. Right? It's an ever-growing pie.
It is ever-growing. It's exploding. It's exploding pie.
It is. And to your point, people do think that options are just risky and retail just loses money on it. Listen, it wouldn't exist if people didn't make money doing this.
Right.
It wouldn't exist as an asset class, right? I don't know. It baffles me so much when people spread the negative. Like, I can appreciate people having disclaimers and warning, hey, don't do something stupid. Don't be a baby playing with a hammer. Go and figure out how to use the hammer. While you're at it, learn how to use the Phillips screwdriver, the crescent wrench, learn what a torque wrench is, figure out when you need to have a pipe wrench versus a crescent versus something else. Like, understand your tools, understand how they work, understand the mechanisms, and take your time, but don't just try to dive into something without all the knowledge. And I think that's the part where it becomes risky. Right. That's the part where it gets stupid. That's where people lose money. Mm-hmm. When you go to the casino, you just learn how to play blackjack, and you're putting everything all in on a 13, and you're saying hit.
Yep.
Like, that's when it's dangerous.
Yep.
So. Yeah. All right. Well, I think that's the end of this episode. I don't know how long this is going to be. We'll find out in a second when we stop recording. But Greg, congratulations on such a great month. We are going to recover. We are going to do better. And we are going to have a very good February 1st or 2nd, whatever it is, where we talk about our January.
You know, my money says we're going to be profitable by the time we film next week's episode.
Ooh, I hope you're right. All right. Well, with that said, don't forget, hit the like button, hit the subscribe button, share this with your friends, post it on X, do all that good stuff. If you want to sign up for the options crash course, not a lot of spots left. January 31st, be there or be square. I don't know. I can't believe I just said that. That's it. We're out. Peace.